Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. History doesn't often repeat itself, but it often rhymes. And I think we are seeing some interesting parallels in 2022 from the dot-com crash in 2000, which lasted all the way till 2002. And there's one CEO that reminds us a lot of Jeff Bezos, one of now the richest people in the world and one of the most well-known CEOs. He survived that dot-com crash. So I wanted to discuss these parallels with John Quast. John, this was actually your idea, so I'm excited to talk about this with you.
Travis, the narrative arc between Amazon during the dot-com bubble and this other company are so similar, it is almost eerie. And just to kind of set the background here, Amazon in 1999 basically tripled the amount of employees that it had working for it. So it went from about 2,000 employees to over 7,500, which in 1 year, that's astronomically mind-blowing. Now, during that year, they also grew revenue by a crazy amount as well. Revenue was up 169% during that 1999 year. So one of the greatest growth stories around. Of course, this is the dot-com bubble. The stock was also flying high. But right around the turn, 1999-2000, that's when things started to go a little bit wrong. The narrative started shifting. Amazon stock absolutely plunged over 90%. And it's really interesting to look at Amazon as far as what the headlines were around that time. So I found a headline from the Washington Post from January of 2000, and the stock had just fallen a big amount during the day because it had just come to light that Amazon had a secret layoff. So they secretly, quietly laid off 150 of their employees. Now remember, they just had tripled their workforce. They didn't make it publicly available. Somehow it got found out. And when it got discovered, the stock got hit pretty hard because this was like a sign something is wrong at Amazon.
And I want to put that drop in the stock to context here. At the end of 1999, Amazon was valued at over $30 billion. This was not a small company at all. This was a really big market cap. Jeff Bezos was one of the richer people in the US at that time. So the fall of a company like Amazon was pretty dramatic, and this was actually the start of it.
Yes, it was. Now, if you look at those 1999 results, revenue up big, 169%, like I said. However, loss from operations over 600 million. This is on revenue of 1.6 billion. So 1.6 billion versus over 600 million in loss from operations. That is astronomical. And here's what the Barron's headline said after Amazon reported those full year 1999 results. Here's what the Barron headline said. Raising fresh funds will be more difficult if Amazon's operating losses continue to mount and its stock price continues to go down. At the time, market cap was around 22 billion. It had already fallen a little bit, but Barron's already sounding the alarm. Hey, this is an unprofitable company. We've just gone through a bubble. All of a sudden, they're having these financial problems and their stock is down. How are they going to raise money? How are they going to survive?
Yeah, and this brings us to, I want to bring in the comparison that we're going to make here, because I think in 2000, even 2001, I believe the stock bottomed in 2002 at about a $4 billion market cap.
Yes, and that was after another round of layoffs in 2001, 15% of the workforce. So we're talking basically over 1,000 people Amazon is laying off. So no longer even a growth company, the argument would be. And the headline at the time, just saying, it was comparing Amazon to a company called etoys.com. Do you remember etoys.com? I sure don't.
I don't even remember that one. Yeah, I'm looking at the chart here. Growth stalls, losses are mounting, and there's questions about the viability of this company long term. Now, if you take a step back and think about where we were going as a society with e-commerce, with all of that stuff, this was a great time to be buying Amazon, but it's extremely hard to buy these disruptive companies at the bottom of the market when everything seems like it can't get any worse. So what is the company that reminds you of Amazon and the CEO? Because I think the parallels, once you take a step back and start thinking about it, are really striking.
Indeed, they are. And the company here is Coinbase Global, and the CEO is Brian Armstrong. Now, I know what you're thinking. This is not Amazon, right? There's nothing comparable with Amazon and Coinbase, but just consider some of the numbers here. In 2021, Coinbase tripled its workforce. In a single year, tripled its workforce. Now, this is after Coinbase also basically 8x'd its revenue during that year. So the growth is even better than Amazon's during the dot-com bubble hype. And it was also extremely profitable, Coinbase. Now, all of that has turned around. All of a sudden, growth is coming down because people are questioning the viability of charging platform fees for trading cryptocurrencies, much like people questioned, how are you going to make money in e-commerce selling books? You also have Coinbase laying off employees here. We just came out this week, basically almost 1,000 employees losing their job at Coinbase. That translates to almost 20% of their workforce at this point. And the market is really questioning the long-term viability of Coinbase. And there's some really concrete data to back up what the smart money thinks about Coinbase. Coinbase issued bonds for 2031, $1 billion worth at a 3.625 interest rate. Those bonds right now on the open market are trading for 51 cents on the dollar. In other words,
crazy.
the bond holders do not believe that Coinbase is going to be able to pay those bonds back in 2031. So you could buy those bonds right now, guaranteed almost doubling your money if Coinbase survives and has the financial means to pay those bonds back in 8 years. Here's something, as I think about these two companies, we're comparing Coinbase and Amazon, but I also want to compare Jeff Bezos and Brian Armstrong. And so something that Jeff Bezos said in one of his letters to shareholders, he said, given a 10% chance of a 100x payoff, you take that bet every single time. You're still going to be wrong 9 times out of 10, but that one time that you're right out of 10 more than makes up for everything is the principle that he was communicating. Some people call this the Pareto principle, where only 20% of the inputs drive 80% of the outcomes. But the idea is if you can make small bets in things that pay off big time, those are bets worth taking. And Amazon has really, if you look at what is driving its business today, it's not e-commerce, even though that is something in the hundreds of billions of dollars. But it's really the things that they built around it, such as Amazon Web Services is the big one. In advertising, when you think about it, that e-commerce platform by itself doesn't do a whole lot. But now that they have it, they can add on these other things, such as advertising, which is a much better business. And so so that's a quote from Bezos. Now here's a quote from Brian Armstrong, and this is in 2017, writing on his Medium blog. He says, by lowering the barrier to create new digital currency applications, not new digital currencies, new digital currency applications, we see an explosion in the number of ideas tried. And that is something that is basically Coinbase's mission. Lower the hurdles so that more ideas can get tried, and then they can have their hand in whatever one of these ideas actually winds up panning out. And we have seen this with Coinbase over time with its Coinbase Ventures, but also when they were the co-creator of the USD coin, one of the largest cryptocurrencies that there is, and a rising stable coin that's actually producing a lot of interest income. I know you have a video talking about that, but it is a big winner for the company. And when you look at Amazon trying a lot of things that are going to fail, but a few that turn out, Coinbase is really similar in that regard. Brian Armstrong, very similar in his mindset to Jeff Bezos in that area.
Yeah, they're both extremely long-term thinkers. If you want to understand a little bit more about Armstrong, I encourage you to go back and listen to the last 2 or 3 quarterly earnings calls. It's striking how clearly he thinks about the business, what the long-term vision is, and then how to get there. Because I know in the last one, we were in the middle of this crypto winter, as we call it, and it was, here's the mistakes that we've made. Here's how we're remedying them. Here's what we're building for the future. So it was basically telling investors, don't worry about what happens in the next 3 months. Think about what we're building for the next 10 years. And he has examples of the last crypto winter in 2017, 18. They came out stronger. I think that would be the argument for them. If the crypto market turns around, they're going to come out stronger. So this is a perfect example. In 2000, you could say, is e-commerce going to really be a thing? Are people going to be buying stuff online? Are regular people going to be afraid to put their credit cards on a website? Well, it turns out the answer was, yes, we do it all the time. And as a result, Amazon became one of the tech giants and a massive winner for investors. The question for us today is very similar. Is crypto, Web3, all of this stuff going to be a big thing 10, 20 years from now? I generally think that the odds are fairly high that we are using them in some way, shape, or form. I don't know exactly how, but if we do, I think Coinbase is going to be a huge winner. So a lot of parallels there in not only where these companies are from an operations perspective, but the way these two executives think.
As you look at Coinbase, it is not etoys.com. It is the Amazon of the cryptocurrency space. And I believe that you're absolutely right to ask the question that you asked. And it's something that every single investor, any person thinking about Coinbase stock needs to answer. Does cryptocurrency, does Web3 have a future? If it does, I believe Coinbase is the Amazon of the space. If it does not, then it doesn't matter because Coinbase is tied to that space's future one way or the other.
Yeah, I think that's exactly right. And if you just look at their website, I'm looking at the way that they lay out their business. So they serve individuals and customers. You can obviously trade crypto on their exchange. That's where a vast majority of their revenue comes through. But they're talking about earn, so staking crypto assets. That's going to be a big thing. Ethereum staking is going to be a big revenue source for them starting in Q4. The wallet, I think that's going to be a real key as companies like Starbucks and Nike and Disney start to explore what are we doing in this Web3 space. They're going to have somebody hold those assets. Partnering with a company like Coinbase makes a ton of sense. Borrow, banks are partnering with Coinbase. Then you have their business solutions, institutional trading, obviously, but then they have e-commerce. They're partnering with Shopify to provide back-end services for people who want to pay with cryptocurrencies, prime brokerages, an asset hub. There's cloud services. You're absolutely right that a vast majority of people, I think, identify Coinbase as an exchange company and number go up, number go down. That's all that the company does. But the reality is very different. And I think it's a very interesting parallel to Amazon where, yes, people think of it as an e-commerce company where I go buy the random item that I need and get it delivered in 2 days. But the reality is the value in Amazon's business is not really that. It's everything around it. It's AWS. It's advertising. It's all of the businesses that they're trying out. So yeah, incredible parallels between these two. It will be interesting to see how this plays out, but I do really like the parallel between Jeff Bezos and Brian Armstrong.
The only thing I'll add here at the end, Travis, is I feel like a hypocrite sometimes talking about Coinbase stock because I don't actually own this, even though I have followed this company very closely since it came public. It's one of those things where in my portfolio of stocks, I have a lot of more speculative positions. And I think that Coinbase does fall into that category for me, only because I am still so unsure about where cryptocurrency is going. I don't have that answer to the question satisfactorily for myself. Where does the space go? And so because of that, I don't have a lot of room in my personal portfolio for a more speculative position like Coinbase right now. However, all the things that I have said here in the video, I do believe is true. If cryptocurrency has a future, it's the Amazon.
And I think that's totally a fair take. And I think this is a case where I do have shares of Coinbase. It has not done well in my portfolio. But this is a company where the right move might be to say, hey, I'm really interested. I really like what they're doing. I think Brian Armstrong could be the next Jeff Bezos. But I want to wait for them to prove it and to get out of this crypto winter and to grow all these ancillary businesses and get back to profitability. And by the way, they just announced a 20% layoff this week. So stuff isn't going well operationally right now. I want to make sure that they can get past it so that I know that they're the Amazon and not the, pick your pets.com type comparison in the e-commerce business. So that's a totally fair way to think about this investment right now is I'm interested, but it's not time yet. And if this does become a 100x stock from here, I want to make sure that I get in on some of that ride, but I don't need to be in the 100x because there's, like you said, there's maybe a 90% chance that I lose all my money. So yeah. I think that's the right way to think about it for a lot of investors. Thank you for watching. Please subscribe to Rive Investing and subscribe to John's new channel, Working Capital JQ. He will be on YouTube regularly. And give us your comments about this one. I think this is going to be interesting to see what people think about Brian Armstrong and Jeff Bezos here. Give this video a like and we'll see you here next time.